Now let's take a little more detailed look at defining actual costs and how you can actually understand where to get the actual costs. Now, I recommend that when you're developing value stream income statements, that you use a cross-functional team to look at expenses by line item or by your cost centers. It's really a very interesting event, and that's the way I conduct it when I work with companies, as like a Kaizen event, because everybody learns a whole lot more about costs. It's sort of amazing that people say, "Oh, I didn't know that cost was in this expense category." So let's take a look. Labor cost. The actual cost on a value stream income statement is based on the employees assigned to that value stream. All of the employees. Like in manufacturing, sometimes you distinguish between direct labor and indirect labor. In traditional manufacturing, indirect labor is overhead. Well, you have people assigned to value streams or value stream teams. Those are the people. Their salaries and wages and benefits make up the labor cost. Where can you get this information and extract it simply? Out of the payroll system. Your material cost. It's the actual material cost input into the value stream. And it's usually based on the amount of items purchased or issued. Okay, now for accounting and finance people, this is different than cost of goods sold. But again, we're looking at actual material cost. Why do we want to understand what's coming into the value stream? That's because any material that comes into a value stream, there's three outcomes. One, you can use it and produce the product. Or, for example, if it's like in healthcare, you can consume the supply for patient care. You can stock it, which we don't want to do, and we have a corresponding material flow measure to tell us if we're stocking. You can also scrap it. We have a corresponding lean performance measure of defects or scrap rate, which tell us how well we're doing on that. So what should you use in terms of purchases or issued? If you have unique material coming into the value stream, you could use purchases. If you have some level of common raw materials, which may go in, and maybe there's some kind of fabrication, and then they're distributed to individual value streams based on what components are being made to be used, or common supplies are distributed, then maybe you look at the amount of material issued. Machines. Depreciation, maintenance, repairs, tooling. All that information is in the general ledger. I mean, you also have fixed asset records, and you can look at those fixed asset records and understand what value stream those fixed assets are in. And then from there, it's just a matter of finding out which expenses need to be assigned to which value stream. And you might find other actual direct costs. Okay. And again, as you go through your entire general ledger, I'm going to give you a quick example of that. This is where you might find things like unique supplies. I've had some companies say that they can assign sales commissions to value streams. But what you really want to look at is what are the actual costs that are direct, that the value stream really has control over in terms of their operating practices or decisions.